Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to the channel. This is day 7 of our Trading for Living series, and welcome back once again. Today we'll be looking at mastering chart patterns, and please, anyone watching me today, pay much attention to this very particular video because we'll be covering how to identify chart patterns. You know we are starting the technical analysis videos, so pay attention to the previous and the subsequent videos, okay? If you are watching this video but you have not already watched the day 6 video on candlestick secrets, please go back and watch it before this lecture. I believe in systematic way of learning, so please pardon me and follow my steps, okay? And if you don't understand anything, feel free to email me at daytradeforliving@gmail.com daytradeforliving@gmail.com, and I reply in detail, okay? Today in this lecture video, we'll move on further with chart patterns. In the previous day 6 video, we discussed candlestick secrets and how to read and interpret candlestick characters. We also looked at how 2 or more candlesticks form a pattern. We looked at some of the common 2 and 3 candlestick patterns I use personally to trade. Like we talked about a lot of these stuffs. We talked about their names, right? And what they mean, and I said their names doesn't matter. What matters is what they mean, the meaning behind them. We discussed that when you see a hanging man like this, it means there's more bullish pressure, right? Bulls push the market up, so they compress the price. Remember, guys? Good. We talk about if you see a doji, it means indecision, which means that both bulls and bears, or buyers and sellers, are all strong, so they are all compressing the price to the middle. Remember, when you see a full body, it means there's full bullishness, or if you see a full bear candle, there's full bearishness. We learned that candlesticks have open, close, it has high of the candle, it has low of the candle. We discussed all these ones in the previous day 6 video, so if you have not watched, please go back and go and watch, okay? We also looked at the 2 patterns. We discussed how these patterns are formed, the engulfing candles, how they are formed, the morning star or 3 patterns, how they are formed. We discuss each and every one of these in those videos, so there's no need to discuss it here, but for a small refresher, I'm just going through this so that anyone who have not watched will be able to refresh their mind here, okay? So today we are moving more further, and remember that alphabets forms words and words form sentences, right? Same as in trading. The candles form 2 or 3 candle patterns, and the candle patterns forms chart patterns, and the chart patterns forms the whole chart. So put that one in mind, guys, for now. So what are chart patterns? Chart patterns are the simple common patterns that we can see within any chart or a graph. So you see your graph, you can see some repetition, right? So these are called chart patterns. This pattern show within the price movement of a chart. So they provide some structure to the charts that we will exploit to make our trading decisions. These patterns help us to analyze and trade the market. So chart patterns can also project price movement and allow us to project forward in time to identify future price targets. So chart patterns also identify trade opportunities, allowing us to enter the market on a breakout. So there are so many ways we can trade with chart patterns. So they just help us to exploit some opportunities in the market, okay? There are 2 main categories of chart patterns. We have continuation patterns and we have reversal patterns. Continuation patterns predict the continuation of a price movement of an asset, a commodity or a stock. And the reversal patterns predict the price drop or return or turnaround of price movement of an asset. And once again, it can be forex, it can be stock, it can be indices, it can be commodities, it can be metals. Under these 2 main categories, which are continuation and reversals, we have different types too. So let's start with continuation chart patterns. Before a chart pattern is formed, there must be a trend. And what's the trend? A trend is one directional movement of the price of an asset. The market charts move in three major ways. We have uptrend, we have times where the market go through downtrends, and we have sideways trends. So before a pattern will form, there must be a trend. So if a chart pattern breaks and continues to the original direction of a trend, it is considered as a continuation pattern. So as we can see here, let's assume that something happened here, right? And after that there was a breakout and the market continued, which means that is a continuation pattern. So let's see some examples of continuation patterns. The first continuation pattern we will be discussing is the symmetrical triangle. We all know triangles, right? Three-sided figures. So symmetrical triangle means that this is like a perfect triangle. All the sides are the same, right? So it's symmetrical. And how does it form? The price of the asset contracts with lower highs, which is like a falling triangle, a falling trend line, and higher lows, like a rising trend line. So in simple terms, I just say that when you see a pattern such that the price is consolidating within a small figure like a triangle, you draw a trend line across, you draw another trend line across for them to meet each other, and when this trend line is being broken, now you can predict the movement of a price. Okay, so that is symmetrical triangles, and this one comes in different shapes and different forms, so you must be able to identify these patterns as early as possible. Okay, as early as possible. Look here, this same pattern could have also happened here. See, can you see, as we drew this line here, it would have also be a triangle, you see, and there was a breakout and the price still continued. So you must develop the skills to identify these patterns as early as possible to enter a trade with them. The second continuation pattern we will be discussing is the ascending and descending triangles. Just like symmetrical triangles, some other triangles are also formed, just that they are not formed perfectly. So one side will be sloping, while the other will be very flat. They are called ascending and descending triangles. So know that every triangle is a triangle. Either it is symmetric, either it is ascending or descending. You must have the eye to spot a triangle. So what can you see here? You can see that here, you see, there was a little consolidation within this small triangle. Can you see, guys? After that, there was a breakout of this triangle and the price continued down. In the uptrend, we can see the same thing. There was a small consolidation here and there was a breakout from this triangle. Can you see, guys? So these chart patterns occur frequently in the market. As I said, you must develop the skills to be able to spot them and trade them as early as possible. The next common pattern we will talk about here is the rectangle pattern. How does it form? Price move and forms short range like box. So you can see that it forms like a range within a small box, right? And the pattern is confirmed when there is a breakout from this particular box. Sometimes there can be a very fake breakout. It can break out and come back again. So you must be careful when you are trading this particular pattern, okay? So go through other charts and see if you can spot many of these rectangle patterns. In the downtrend too, the same scenario happens, okay? Then next, we will look at flag patterns. With this pattern, the price forms a short-term consolidation against the direction of the trend. So guys, there are a lot of chart patterns, but these are the ones that I trade. These are the ones I trade personally. So we talk about what? Let's recap. We talk about symmetrical triangles, right? Ascending and descending triangles. We talk about the rectangle pattern. We talk about the flag pattern. There are a lot, but these are the ones I personally trade. So let's look at some of the reversal patterns too. The first reversal pattern we will look at here is the falling wedge. This is a reversal pattern formed when a triangular pattern breaks to the opposite side of the trend. So there must be a trend, original trend, and when it forms this consolidation within this triangle and there's a breakout, you can enter your trade here and you take your profit there. Guys, I'm still not saying go and buy and sell. Just listen to the concepts. Test them before you go and use them. All this I'm going to provide here is for educational purposes. When it's time for you to buy and sell, I'm going to tell you personally that do this and do that and do that. Don't follow this blindly. The next reversal pattern we look at is the double tops and the double bottoms. So they form like a W pattern. This is formed when the price of an asset or a particular commodity is rejected at a particular point twice. So the pattern is confirmed when there is a breakout here at the swing high or the swing low if it's a downtrend swing low. So when there's a breakout, when this price is being rejected, price comes to the same area again, rejected again, and the price comes to break this particular swing high, which means it's time to go bullish. So we enter our trade somewhere here. I'll tell you exactly when to enter, and then we take the market up. So this is called double bottom. Why? Because it's happening at the bottom of the trend, right? We also have double top. With the double top, this W pattern is formed at the top of the trend, which means there must be an uptrend, and then this price will be rejected. Price will come back to the same area again and be rejected again. Now when price drops and breaks this low, we enter our sell and we take the market down. It's called double top pattern. But aside double tops and double bottoms, there are also triple tops and triple bottoms, which means that the price rejected at this particular area 3 times. So they form like a rectangular format, just like the rectangle pattern. But this time around, see, we see one rejection, the price will come back again, being rejected. So if you're a trader, you are waiting for it to break here, right? It still couldn't break here, it went back again, it was rejected again, which means you're going to enter when there is a breakout here. So we enter when there is a break. So this is called triple top. When there's a break, and then we take the market all the way down. So this reversal pattern is very good to trade because it gives you more confirmation that the price has really been rejected. So remember that before there will be a pattern, there must be a trend, right? Remember, so this was the original trend, right? And now the pattern began to form. So why is it a reversal pattern? Because after it formed, it broke to the reversal part of the trend. Can you see? This was the original trend. The pattern was formed and it broke out to the other side of the trend. Assuming it broke out here, then it will become a continuation pattern. But because it broke down whilst we were in an uptrend, it becomes a reversal pattern. So this is also the reverse of what we learned previously. So here you see price was rejected once, twice, 3 times, and there was a breakout from this particular level, and you enter your trade here, and then you take the market upwards. So the triple top and the triple bottoms can happen on a downtrend or uptrend, right? So you see the same way here. There was a trend already. There must be a trend, guys. There was a trend already. A little consolidation here. 1, 2, 3 breakout, and we take our trade here. We take the market down. So guys, there are a lot of chart patterns, but these are the ones I have mastered and I trade. If you want to read more and find out more on these chart patterns, just search on Google. There are a lot, right? But remember, as I said, these are the ones that I have mastered. There are a lot. There are a lot. These are the ones I have mastered and I trade personally. So if you want to trade like me, just follow me. With this information, I'm not saying go and buy and sell, because it's not every chart pattern that can be traded. So only the ones I have discussed here that you must sit down and test them yourself. Go through some charts and test them. Okay? Go to some charts and test them. Open your favorite chart. It can be anything. It can be forex, can be stocks, can be indices. Open it. Try to find as much as you can. Remember, practice makes perfect, right? And experience can never be bought, but you must master. No matter what I teach you, no matter the time I take to explain to you, you must also gather your own experience. So you must go through these charts, identify these patterns, and see how many you can get. If you're able to get 100 of these patterns, I'll be glad, because it means you've done more research. So go open just one chart, scroll back, find at least 100 of these chart patterns. One particular one, focus on one at a time. If you are focusing on the flag pattern, focus on the flag pattern at a time. So you identify all flag patterns, at least 50 to 100. It's more, right? Yes, but that's what you want to do if you don't want to waste your money. Okay, you don't want to waste your money. You don't just trade anyhow. You must test the chart to see, okay, this particular chart I'm trading, does it respect the flag pattern? Some chart do not respect the flag pattern. This chart I'm trading, does it respect the triangular patterns? So you must test to see before you put your money in the market. Guys, you remember this channel, I created it not to actually make money from YouTube. I'm not a YouTuber, but to help anyone out there. So if this particular presentation looks very academic and you don't understand, guys, it's because I don't want you to lose your money. Okay, I don't want you to lose your money here in the market. That's why I'm taking my time to take you through all these steps. Day trading is simple but difficult to master. So stay focused and you achieve your dreams as a day trader. Okay, don't waste your time roaming, watching this video, going here up and down, and you end up losing your money. Guys, if you don't want to lose your money, please follow my steps. Okay, that's my objective for this whole channel. If I already have started this channel, I host my own webinars and I'm okay. You see, I'm okay with the webinar because webinars, I guess those who are serious will only sign up. But with the pressure from my wife and saying I should help the new traders out there, that's why I created this channel. So that anybody who is also losing money will stop losing money, guys. So that will be all for this video. But before we go, I will advise you to re-watch this video over and over again to grasp the concepts I've discussed here. Make sure you like and subscribe to the channel just to keep you motivated to create more content like this. And see you in the next lecture.